Alright, so today we see a considerably strong bullish reaction just as the main indices and many other stocks have reached their critical support points. What a funny coincidence, isn't it? Now you may ask, alright, but now what? Well, according to the tenet number 6 of the Dow Theory, trends persist until a clear reversal occurs. That's not me saying it, it's the Dow Theory created by Charles Dow, one of the most important people in the world's financial markets, alright? Just that. The guy is the founder of the Wall Street Journal, creator of the Dow Jones Index, and hailed as the father of technical analysis. And that's precisely the content of the videos here on this channel, because it is never about my personal opinions. Everything described here is based on technical evidence and facts, alright? Here we study the market without bias and in a professional manner. If you don't know me yet, well, my name is Nathan and you are welcome or welcome back to the Finance Hydra channel. Now, as we can see here, SPY is materializing a very strong bullish reaction today, breaking yesterday's high right above this double support level around the 565, which was the previous top level, which is now acting as a support level here, and here again. What's more, we are right above the 21-day EMA, the exponential moving average. Therefore, this double support level is working very well for the SPY. As long as we stay above this double support level, the bullish bias will persist. Do we see a technical reversal right here, right now? Do we see any technical evidence suggesting that SPY could reverse this bullish sentiment? Absolutely not. Right now, we are far away from our support levels. We are leaving a huge shadow above the candlestick's body over here this Friday. Therefore, we are still very bullish on the short term, on the 1-hour chart over here. We are now above the 21-hour EMA. We broke the 569 over here resistance level. We are trying to make higher highs, higher lows. So yes, we are technically in bullish territory on the 1-hour chart. We are still in bullish territory on the daily chart above our main support levels, and we are still bullish on the weekly chart as well, above our support levels, making bullish candlestick patterns over here, and another bullish candlestick pattern this week as well. Therefore, we are bullish short, mid, and long term speaking, period. All right, from a technical point of view, we are still bullish. Only a crystal clear reversal could materialize a technical pullback, a sharper correction on the weekly chart, possibly to the 21-week EMA over here, rejecting the bullish bias on the daily chart. But as long as we stay above this double support level over here, this is not going to happen. Therefore, for now, let's keep our eyes open around this area over here, because it all depends on how the SPY is going to behave next week. If we lose this key point, alright, we're gonna reverse the midterm trend. But if we don't, alright, the bullish bias will just persist. In this scenario, it's quite easy to see the QQQ or tech stocks ETF over here retesting higher resistance levels like the $493 over here. The previous resistance level, which did work with an astonishing precision as a resistance level again in September this year. Alright, we did a top signal over here and then we corrected back to our support levels, back to the 21-day EMA over here. As long as we stay above the 476, the bullish bias will persist. As long as we don't make any crystal clear bearish reversal chart structure like a lower high, lower low, we are not gonna materialize a sharper correction on the weekly chart, leading the QQQ back to its support level, the 21-week EMA over here. Still speaking about the weekly chart, we are still inside this ascending channel, alright? So the long-term trend is still bullish. In theory, as long as we don't see any meaningful reversal over here, we are heading towards our next resistance level, which is the ceiling, which is the resistance level of this ascending channel, all right? This purple trend line up here. So for now, we are still maintaining the bullish bias. We are still above critical support levels. Nathan, what if the QQQ loses this double support level? Then all right, 21-week EMA is our next technical support level. If we lose this moving average over here, then the support line of this ascending channel is going to be our next technical support level. All right, very simple situation. For now, we should monitor this key point very closely. 476, very close to the 21-day EMA. All right, and how this is gonna affect our stocks? Because our stocks right now are very bullish. They are still exploding. They are still above their main support levels. But if the indices maintain their bullish biases, if we see the indices above their critical support levels, we are not going to see any meaningful correction on Nvidia, Tesla, AMD, PLTR, NIO, SOFI, Micron, Super, Microcomputer, etc. None of these stocks are going to make a decent correction over here. Therefore, in this scenario, Nvidia could easily seek higher resistance levels like the $131, the 130s over here. Our next technical resistance level, there is another one at 136, and of course above this key point there is the all-time high around 140s. We are heading towards our next resistance levels. We don't see any meaningful top signal. We don't see any meaningful bearish reversal candlestick pattern over here. Oh, but Nathan, today's candle is bearish right now. Yes, the moment I'm recording this video, it is still bearish, but even if we see Nvidia closing, making a bearish candlestick today, it is not gonna be enough to reject the bullish sentiment, because we are still making higher highs, higher lows. And that's why Nvidia is still bullish. Oh, but Nathan, what if we see a top signal over here and then Nvidia makes a lower high, lower low? All right, then we are gonna reverse the bullish bias. But again, guys, this is just fiction. We can't predict the future. We don't know the future. Real trading is reactive. It is not predictive. Therefore, in the lack of technical evidence suggesting a top signal, suggesting a bearish reversal, Nvidia will maintain the bullish bias, and the 130s is still a valid technical target to work with. Period. Very simple situation. How this is gonna affect our dear Tesla stock? Because Tesla is right now trying to react above a very important support level, the 21-day EMA, this purple trend line over here. We are about to close above the 245 again, right? This is very good. Oh, all right, we see a meaningful bullish reaction over here. Now, in theory, Tesla is still bullish, all right? We are materializing a bottom signal over here. The 265 is our next technical resistance level, and the problem is that this key point is a very important one, because seen on the weekly chart over here, we have a very strong resistance level since December 2023. For almost 1 year now, for 10 months now, we see Tesla failing in breaking the 265, all right? This is the third time we see Tesla trying to break this key point since December last year. So if we see Tesla breaking the 265, fantastic. We're gonna see a very meaningful, very powerful bullish reversal chart structure. I did tell you guys this week during our live stream that Tesla is materializing a gigantic cup and handle chart pattern on the weekly chart, all right? So if this scenario actually materializes, Tesla could easily retest the all-time high next, because, well, it is a very powerful cup and handle chart pattern. This key point, 265, is a very dangerous resistance level right here, right now. So if we actually manage to break this key point, the all-time high is going to be an easy target to aim, all right? Long-term speaking. All right, remember, long-term speaking, this is the weekly chart. Every single candle represents one entire week. So it is not gonna be quick. All right, it is gonna take many months, maybe even years. But this is a very interesting and valid technical chart structure to work with right here, right now. Mid-term speaking, Tesla is still above our major support levels. Nathan, what if Tesla loses our support levels? What if Tesla loses this purple trend line over here? then okay, we're gonna see a sharper correction on the weekly chart, possibly to the 21-week EMA. However, I believe we can use Fibonacci to work with our next targets. Therefore, we have the 38.2% retracement around 232. We have the 50% around $223. And of course, we have the 61.8% around 213. Any bullish reaction around one of these support levels could be another possible buying opportunity. If we see Tesla actually correcting to these levels, if we see Tesla losing the purple trend line over here again. If this scenario does not materialize, the bullish bias will just persist. All right, 265 is our next major resistance level to work with. Now, allow me to say something to you guys. If you are still watching this video after so many minutes, right? 11 minutes right now, well, I believe that the content matches your tastes and preferences, which gives me the courage to ask you to click the like button to support me as well. This is very, very good for this channel over here. And if you're not a subscriber yet, consider subscribing. Subscribe for unbiased daily analysis on SPY, QQQ, Nvidia, Tesla, AMD, PLTR, NIO, etc. Many other stocks every single day here on this channel. All right, so subscribe to join the Finance Hydra channel's community. All right, and remember, if you want to learn more about technical analysis, price action, statistics regarding trading, well, download my ebook. It is totally free. It is on our Telegram channel. All right, you just join our Telegram channel for free as well. Test our services, and then you download our ebook and start learning everything you need to know about candlestick patterns, chart patterns, trading strategies, risk management, etc. So just download our complete ebook on technical analysis. Meanwhile, join our Telegram channel, because there I share my personal strategies, my trading strategies with you guys. We are swing traders and we use technical analysis and price action to guide us in this market. I share my trading statistics with you guys on our website. More than 300 signals were triggered in the first semester this year, so you will find some very interesting details over there. Just take a look at our website. Link is in the video's description. All right. Now, shall we continue over here? When we take a look at AMD, AMD is just phenomenal. All right. I was expecting to see a sharper correction back to our 21-day EMA. However, we are right now exploding, all right? The 174, this gap resistance level is our next technical target, and that's where I see AMD next, all right? Now, Nathan, what if we see AMD correcting again, all right? Any pullback to the 21-day EMA would be just perfect. Possibly another buying opportunity. Right now, we are far away from our support levels, which is quite annoying. I always tell you guys, buy near support levels, sell near resistance levels, all right? Some people do the inverse, all right? They sell near support levels when the stock is dropping, and they buy when the stock is exploding, all right? Because, well, it is very hot right now. It is just exploding. It is not gonna end this bullish bias, so let me buy it, all right? No, we are the inverse. Here we do the inverse. We buy when it's dropping near support levels, and there is a reason for that. Because the risk-reward ratio is optimized near a support level, and sell near resistance levels because these points are technical targets, all right? So we like to do the inverse things over here. You know, let me share a very quick story over here, which tells a lot about trading psychology. Many years ago, I worked with clients, right? I had clients. I mentored a few people one-on-one, and I have this client, this client of mine who, she was a brilliant person, but she was extremely nervous when her stocks were up, all right, were rising. It is the inverse, right? Because when her stocks were dropping, she was okay, all right, it is dropping, I'm prepared for that, you know, it is just a loss, totally normal, acceptable. I'm here, I accept my risk, all right, I accept this risk, so I'm totally fine with that. It is just a loss when I sell it, so let me hold my losing positions. However, when her stocks were up, Guys, she was extremely nervous. Oh, it is up. I need to sell quickly to book my profits. So for every single trade, she simply took profits very quickly because, well, it was going up, so her profits were very small. However, the losses were gigantic. For instance, there is this stock over here, which is a favorite of mine. I invest in Fortinet since November 2020 over here, all right? And I told this client, you know, this stock over here is a tech stock, all right? It suits your profile. I think you're gonna like it. It is a long-term investment. I'm gonna invest at it as well, all right? I really like Fortinet because of this, and that. This was in 2020. Okay, I'm gonna buy it. 2 days later, she sold her shares because it was up $2. In her own words, I asked, why did you sell? It was a long-term investment. Why did you sell? Oh, because it is $2 above my entry price. And then she lost. And then she lost the opportunity. So this tells a lot about trading psychology, right? Most of you guys are the inverse. I know that. Most of you guys are more nervous and stressed when stocks are down, but when stocks are up, everyone is happy, everyone is rich, everyone is smells so good. So all right, when stocks are up, it is easy, but when stocks are down is the most difficult. And this is why I always try to teach you guys here in this channel, because you have to learn to be patient and to work with strategy. This is why we always buy near support levels and sell near resistance levels. We always work with strategy. We always have a plan. If you don't know any strategy, if you don't have any plan, just join our Telegram channel for more strategies, all right? Just take a look at our website, link in the video's description. Now, back to our analysis over here. Palantir, up today. It is up this week, 8% this week. We are exploding. It is not making any pullback. We don't see any top signal either, all right? We don't see any meaningful bearish reaction suggesting that Palantir could correct again. As far as I know, we are heading towards the all-time high, $45, which is our major resistance level over here. And this is it. Oh, but Nathan, what if Palantir corrects back to the 21-day EMA? Probably another buying opportunity, okay? What if we lose the 21-day EMA? All right, let's see if we're gonna see another buying opportunity near the $33 or maybe $31 down here. This is it. The bias is still bullish, long-term speaking. We could even drop all the way back to the 21-week EMA over here, and that's okay. The long-term bullish bias would still be intact. NIO also exploding. The next technical resistance level is $9.55. Any pullback to the 21-day EMA would be acceptable. However, we gotta lose the $6.44 first in order to materialize a decent pullback over here. As long as we stay above this key support level, no pullback is gonna materialize. SOFI is exploding. Next technical target, $8.58. Pullbacks are acceptable, but pullbacks are not enough to actually reverse the bullish bias over here. Therefore, $8.58 is SOFI's next technical target. The Micron is reacting, trying to react above the 21-day EMA. I would like to see a sharper correction over here, as crazy as this sounds, right? Because since the 111, since this resistance level over here, we dropped more than 10%. But okay, we are reacting right here, right now, above the 21-day EMA, above the $96.18. Only if Micron loses this double support level, we could see a sharper correction back to the $85. As long as we don't see this scenario materializing, the bias will remain bullish. Super microcomputer, below the 21-day EMA, making lower highs, lower lows. Apparently, the $38 is acting as a double support level. Therefore, this could be a double bottom chart pattern. The problem is that we gotta see confirmation. We must see confirmation, meaning we gotta see the breakout of the $48.35 before assuming this is a double bottom chart pattern. All right, it could be, but so far we need to trigger this key point over here, $48.35. ARM Holdings is already reacting above its double support level. It is looking very good. It is maintaining the bullish bias over here. All right, if you ask me, this one is supposed to retest our next resistance level, all right, around the 150s. If we lose this trend line over here, then it's done. We are gonna probably retest the 114 again, engaging in a bearish momentum. So far, so good. The situation is still under control. Next week, we're gonna have more answers, but so far, we are maintaining the bullish bias, trying to reverse the short-term bearish sentiment. Broadcom is already very bullish. We already reacted above the 21-day EMA. We broke the 172 resistance level. If you ask me, we are heading towards the 180s again. If we lose the 21-day EMA, all right, the 160 is gonna be our next technical support level. On the weekly chart, we are still maintaining the bullish bias, which is good. And this is why I tell you guys, any pullback to one of these support levels could be just another buying opportunity. So far, we gotta wait for more confirmation. We gotta wait for the breakout of the 180s pivot point in order for us to see Broadcom materializing a decent bullish continuation chart structure. And remember, subscribe this channel for daily unbiased analysis. Join our Telegram channel, the 5% Project, for more trading strategies, for more insights, and of course, for valuable information that is worth money. Just take a look at our website, link in the video's description. Thank you very much for your audience, my dear friends. See you guys next Monday. Stay safe. Farewell.